think that Zoom did not deliver a next level of what's going to happen post-pandemic.
Hey, what up, everyone? It's your boy Dio, and this is Frankla Investment. So, guys, I'm going to be sharing with you guys on this video is going to be divided into three parts. The first part is going to be CNBC host talking about Zoom. I mean, from the fundamental analysis point of view. Then I'm going to take you guys into the technical part, and I'm going to show you guys what my opinion is about the stock, where the price is, where it was, and where I believe the price is headed towards. Then at the end, I'm going to share another video, talking about the fundamental also from Jim Cramer, Mad Money. So guys, if you're new to my channel, please hit the like button and subscribe. I remain your boy Dio, and this is Frankla Investment. Enjoy the video, guys.
That people would want to rave about. In full disclosure, my stepson works for Zoom, but we don't talk about it because you don't do that.
Right.
But I do think that Zoom did not deliver a next level of what's going to happen post-pandemic. Now, in Zoom's defense, I had yesterday the CEOs of the people who did the the Standard & Poor's deal with IHS Markit. How did they do the deal, David? Zoom. And yet that did not come up. If I ran that conference call, I would have done that conference call quite differently.
The Zoom conference.
Yes, I would talk about how they are coming for the enterprise.
Yes.
That they're working their way up.
Yeah.
That they are going to take control of the enterprise because it's easy to use, and they're going to be able to obliterate the competition in the same way that what are you smiling at?
I'm just thinking about who you're talking about, the competition. Oh yeah, they're going to obliterate Microsoft. They're going to obliterate who? Salesforce now, which will own Slack at some point. They're going to obliterate Google, which, by the way, when you now in your Google Calendar schedule a Zoom meeting, it actually gives you a Google Meet link.
Okay.
That's a pretty tough competitive set they're going up against.
They're smart guys. You didn't even mention that Cisco's got in for with
Yeah, I forgot about Cisco. Oh, yeah,
David,
sure.
it's easy. You just click on it. Everybody else is a little more complicated.
Got it.
People like Zoom. Most of the guests who come on, David, are they on WebEx? Some. Are they on Google? Some. Most are on Zoom.
Yeah.
So why don't you criticize them? It's like, I hate Apple, and that's why you have to pry my cold, dead hands off of this thing. David, look at
I can see you got your phone there. Nobody's going to take that away from you. Yeah, it was a Charlton Heston reference.
Hey everyone, it's your boy Dio, and this is Frankla Investment. So today I'm going to be discussing Zoom with you guys. I'm going to be talking about Zoom video communications including, and I'm going to be telling you guys what I think the price action is telling us about the stock of this company. So this is the yearly candlesticks, and we can see it started in 2019 and this is 2020, and this was before the pandemic. As we can see, I think it started around that is like $63 and it ended 2019 in $146. That is before the pandemic. So after the pandemic, somewhere around this level, I believe $164 in March, when we all went on lockdown, we saw the stock of the company skyrocketing to as high as almost $600. So let's go to the monthly candlestick so that you guys can at least see what I'm talking about. We're going to start from the top and come right to the bottom. So this is it. So this is January 2020 and this is February, this is March 2020 during the COVID-19 the lockdown. So we saw the price of the stock. We saw it going as high, at one point even opening at this huge gap of 438 all the way from $326. We saw it open with a huge gap. Then came this huge pin bar. This is a very scary one. This one happened in August. So we can see this huge pin bar is something to be worried about. After the pin bar in September, we saw this big hammer as well. This is the hammer. This is the monthly candlestick, guys. This thing is very, very, I would be worried if I were to be a Zoom investor, I mean, if you take a look at the monthly candlesticks, it's really scary. And the volume, when you take a look at the volume, also provided to us by Yahoo Finance, when you take a look at the volume, you can see it's dropping like significantly. This is December's volume. It's almost nothing compared to the past, I think, 11, 12 months. So let's go into the weekly candlesticks and see what is happening in the weekly. So this is it, guys. This is what is happening in the weekly. We can see somewhere in January, March, April, we saw the stock, after it broke this resistance level of 104 US dollars. After it broke it, it's hoping here, and then it came back to retest it again around 109 US dollar. It came to retest it. Then since then, it's been going all the way up to almost 600 US dollars. So what does this mean, guys? I mean, look at this huge. There's still a huge space right here. There is a huge space here. This stock is not even up to, this company stock is not up to 2 years, up to, yeah, 2 years. I think it's now almost it's gonna be 2 years. Where in next year in May or so, it's going to be 2 years. Yeah, in April to be 2 years. So as we can see, all the way from 63 US dollars to 600 US dollars. That is huge, guys. That is really, that is big. That is phenomenal. I mean, you hardly see something like this. So Zoom has been a very big winner of this COVID-19 lockdown, whatever you want to call it. Zoom has been a great winner of this pandemic, and those investors that found this company when it was as cheap as this, as cheap as 100 US dollars, have more than 4 times their money. So you guys can see this is what the weekly candlestick looks like. So now comes my idea. If you take a look at the daily candlestick, what do you guys see? What do you see here? This is a very scary one. As you guys can see, this looks to me like, shoulder, second one, head, second shoulder, and shoulder. So if we say this is the head, this is the left shoulder, and this is the right shoulder, guys. I mean, look at that. And this gap up, this was a hammer before, and this was last week during the this was on Monday, sorry, during the earning call. This hammer appeared, and of course I sold it, and I'm still holding it because right now I think let me draw the horizontal line around this level. Excuse me. Oh my god, 346 US dollars. And if we have another horizontal line around this level, I mean, you guys can see what I'm talking about here. I believe this is head, this is left shoulder, and this is right shoulder, and this is only visible on the daily chart. So look at that, guys. Look at that. I mean, we still have a huge zero level here. I mean, we have a huge level here. If this company, and right now there are a lot of technical, there are a lot of fundamental news about the vaccine to prevent the COVID-19 virus, and just today the UK has also accepted Pfizer to, I think from next week they'll start to give those that are vulnerable to contracting the virus. I think they will start giving them vaccine from next week. So there was this breaking news. I'm going to share a link with you guys under this post. So you guys can see this looks like the vaccine is going to take a toll on the stock of this company. I mean, Zoom needs to come up with something. They have to come up with something more than this video conferencing thing. We've had Skype, and they have very strong competitors as well. As you guys are going to hear from Jim Cramer, I'm going to share. I'm going to deal with the technical part of this analysis, and I'll share a video of Jim Cramer from Mad Money from CNBC about the fundamental analysis. So I will let you guys decide. I mean, they have strong competitors. There's Google, there's Microsoft, just name it. So how Zoom need to come up with something else, I believe. And this stock is too hot. It's still very hot. I think it should come down a little bit, and I think it's going to wave in 2021. I'm really going to be watching what Zoom is going to be doing. Of course, they have a lot of money. I mean, they are loaded. They can easily they can easily diversify into another sector away from this telecommunication thing. They can turn to something else. When you have enough money, you can always acquire some company that's not even in your sector, just like Amazon is doing. They are into this food delivery, groceries, not just book, and they are also into this Amazon web service. So they can easily acquire any company. But until then, I think this stock is, it's very hot right now. So am I going to be buying? I don't think I'm going to be buying Zoom anytime from now. I mean, I will be shorting any rally that comes. I'm going to sell any rally that comes from it, and that's what I'm doing right now. If it's open up, I'm going to sell it and bring it back down. So this level is, I believe, if the company is strong, I mean, if their data, their earning report was not really bad. I mean, if they have, if the user base is still strong and people are still using Zoom, even after the vaccine, I think they're going to consolidate around this area. That's what I'll be watching. But if something is wrong with them, they're going to come down here to this support level, and they will try and break it. And if they break it, I think we're going to see Zoom, coming around this level. The safe level to buy Zoom right now is still around this 250, 231 US dollars to let's say 300 US dollars. This level, this is the safe level where I would consider putting some money into Zoom. Of course, it's a long time company, and if you're a true believer, you have to be able to hold it for the next, I don't know, 5 years maybe. And yeah, and also as somebody that also knows a lot about artificial intelligence and what Elon Musk, for example, is doing, the neural links and stuff, I think in the next, maybe 10, 15 years, when we have this AI, when we have this singularity, maybe we're going to be seeing telecommunication, with implant into your head. Maybe we're not going to need computers to talk to someone else, to WhatsApp, to Skype, or to whatever, just have your implant in your head and you can easily call anybody you want to call. So that's one of the concern I have about. I don't know what they are doing about AI. I don't know what they are doing, So yeah, that's my opinion, guys. So if any rally comes, I'm gonna sell it, and if it comes here, I'm gonna take my profit. That's the play of Zoom. I sold this stock. I sold it till here. I got out when I noticed the cases of COVID-19 was rising again. I got out. Then now it's up again. I'm selling it again. I'm still holding, and yeah. So that's what I think about Zoom, guys. When you take a look at the daily chart, you can see head and shoulder means it's going down. If this is truly head and shoulder, we will know. It's too early to tell, of course. So yeah, that is it, guys. Have a wonderful day, guys. I remain your boy Dio, and this is Frontline Investment. Please subscribe if you're new on my channel, and hit the like button so other Zoom investors can see this video. You might be helping someone to save money. Thank you, guys. Bye bye.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer. I'll be one of my friends just trying to make some money. My job is not just entertaining, but dedicated to you. So call me at 1-800-743-CBC or tweet me at Jim Cramer. What do you do? What do you do when the biggest winner from the stay-at-home economy finally disappoints? Do you dump the entire COVID cohort, or do you stick with it on a day where the Dow rose 185 points, S&P climbed 1.13%, and the Nasdaq gained 1.28%? Yes. I'm talking about the reaction to Zoom Video Communications after it reported a very good quarter that wasn't quite good enough for Wall Street. This company is practically synonymous with the new normal. I think we'll look back on 2020 as the year of Zoom. So when you see the stock down 15%, it's alarming. You gotta wonder what that means for the rest of the stay-at-home stocks. The answer? Nothing. Just because Zoom's insanely high growth is decelerating a tiny little bit, that doesn't mean the trend is over. In fact, I'd argue that it's never going away. Because this year has shown us that millions of jobs can be done better from home. No need for that central office. Why go to meetings to negotiate or sign documents when you do everything over the web and save millions, maybe tens, maybe hundreds of millions of dollars in travel, in hotels, in dinners? Zoom? I mean, that's how the $39 billion S&P Global IHS market deal was consummated, as we heard last night from CEOs Doug Peterson and Lance Ugla on Mad Money. The truth is, people are confused about Zoom, and that confusion created opportunities all over the place today because the immediate pin action from when I was on Squawk on the Street, it was wrong. Let me walk you through what happened here, starting with what should be obvious. First, I hate to break it to you, but Zoom Video reported some amazing numbers. Did they obliterate the estimates? Yes. Did they furiously raise the forecast? Yes. Normally that'd be enough, but they didn't reveal gigantic contracts from big corporations. They didn't say that they stole huge swaths of business from competitors, which made people worry that the gross margins aren't as great as they used to be because the company's handling lots of smaller clients who use the service for free, trying to upsell them instead of going after elephants and whales. Of course, when you consider how much the stock has run over the past 11 months, you could argue maybe even it was due for a bit of a pullback. I mean, I don't know. I mean, the stock's up 500% going in. That's a lot of money. I think the stock got overheated. End of story. It's certainly not bad news for the stay-at-home thesis. Not when Zoom made a heck of a lot more money than Wall Street was expecting. How strong are these stay-at-home stories? Are they all teetering? You know what? We're going to go down them. Because I'm tired of hearing that this one's, just like I'm tired of hearing about FAANG being over, I'm tired of hearing that the stay-at-home is over. First off, this morning, Amazon got dinged off the Zoom client was getting hit. It was an incredible buying opportunity. As word got out very soon that Amazon had a fantastic Cyber Monday, something that should come as a surprise to no one. COVID cases are exploding right now. You see those numbers that Dr. Gottlieb's talking about? Holy cow, it's an Amazonathon. And we can finally see a light at the end of the tunnel with these upcoming vaccines. But I bet a lot of people stay home for the next few months and order everything they need off the internet. Because why risk getting sick when you're this close to the finish line? I just ordered some kind of spacesuits for outside on Amazon. I mean, what are you going to do? I mean, what are you going to get? I'm going to go to the store? Buttressing Amazon, you got FedEx, which caught an upgrade from Barclays to talk about acceleration of e-commerce market adoption. That sure doesn't sound like the end of the stay-at-home thesis to me. Second, let's come at this from another angle. Let's talk about Micron, symbol MU. The gigantic commodity semiconductor company got it up significantly this morning, and the stock surged to a 20-year high. It wasn't that long ago that CEO Sanjay Mehrotra came on this show with the stock at $41 and told us it was way too cheap. So Micron would buy back shares hand over fist in the open market. At the time, I felt like you couldn't go a day without some analyst slashing numbers, trashing the stock. Well, today it surged to $67. I'm talking about a huge win. Sanjay, come back. Good work. More importantly, Micron has a heck of a lot more pin action than Zoom Video. Their DRAM and flash memory chips go into all sorts of gadgets, including the hardware you need to set up a home office. That's another sign the work-from-home story remains strong, and it's not what we call a pull-through, where it's not going to be any good 3 months from now. I say that because last night Dell Technologies told us the story of a fabulous holiday season. If your house is your schoolroom, and it's your home entertainment center, and it's your office, well, guess what? You need more than one family PC. You need a boatload, and that's what's driving the revival of laptops. It's an extraordinary cycle, and it's far from over. After listening to Michael Dell last night, I think that Dell, the stock, is a must-buy. Third, we got still more evidence that Apple's having a very Merry Christmas. We keep hearing about the long lead times and issues with availability, which tells you demand for their products is off the charts. This stock has been stuck in the mud, but today it got its groove back up 3%, pin action there. Qualcomm, Skyworks Solutions, and a host of others that you know I like. Fourth, after the close today, we found out that Salesforce.com is buying Slack Technologies, the business collaboration software kingpin. Listen to what Slack said last week. Quote, in a normal post-COVID-19 environment, CIOs expect 38% of employees to work from home routinely, up from 18% pre-crisis, with 94% expecting work from home to remain a durable trend. That's extraordinary, people. Before the pandemic, only 17% of CIOs of companies that have more than 20% of employees working from home. Now, post-COVID, it's going to be 75%. You think that's a trend that's going away? It's secular. It's growing. Sounds good to me. I like the deal, by the way, with Salesforce. We're going to talk, hey, you know what? We're going to bring Mark Benioff later on to talk about his great quarter and the acquisition. How about the people who think Zoom's supposed slowdown signals a slowdown in the economy? Well, that's insane. First, again, Zoom's doing great, but more important, Zoom's total disconnected from the broader economy. When you look at the cyclical smokestack stocks, they tell a very different story. The railroads keep hitting new highs. The car companies are in great shape. Last night, Carvana told us the used car business is hot. Freeport-McMoRan, our largest copper producer, has arguably the best chart in the entire book. This morning, Alcoa, our biggest aluminum company, said demand is getting stronger. Nucor, America's top steelmaker, has a stock that suddenly is roaring. So is the stock of WestRock, the commodity cardboard maker. Sandler. All the chemical stocks are going crazy. You can't believe those runs. That tells you the broader economy is in good shape. What else? Airbnb's coming public, planned $35 billion valuation. When no one was traveling during the lockdown, Airbnb's business suffered. But now we have a pandemic thesis that's blowing the doors off. People want to travel. They just don't trust hotels. They hate the elevators. They'd rather rent out somebody else's house and just bring these and wipe it over, okay? Why not, right? Finally, it's pretty clear that we can get a stimulus deal from Washington that will tide people over until we get a vaccine. More on those negotiations later. I prefer a bigger relief package than the compromise proposal we're hearing about, but half a loaf is better than none. Now, let's go back to Zoom for a second and that so-called horrific 15% decline. Zoom represents the zeitgeist like nothing else. In a negative market or even a neutral market, its breakdown could have crushed the whole complex. Actually crushed all the averages. But because we're in a rip-snorting bull market, the pain was cordoned off, and most stocks that got dragged down by the negative pin action ended up rebounding, some of them sharply. Bottom line, despite what you heard this morning, vast swaths of our economy remain very strong, and that includes the stay-at-home stocks. A good market can shake off discouraging news. A great market can ignore it entirely.